Dear friends of turbulent market times, we have all excitedly followed the crypto market and saw a massive explosion in prices. However, this has seemed to slow down a bit, and in this video we will cover President Trump's impact on the market, why the bull run might be over or not, and where can we expect to see prices go in the future. As always, of course, this is not financial advice. It's just for educational purposes only. So, what is currently going on in the crypto market? As we all know, the confirmation of Donald Trump's victory over Kamala Harris on November 5th to become the 47th president of the United States triggered a massive surge in the cryptocurrency market, with Bitcoin soaring from 67,811 to an all-time high of 92,864 thousand, Ether climbing from 2,410 to 3,420, all in just 9 days. In total, the crypto market soared from 2.22 trillion to 306 trillion during this period, marking unprecedented growth, driven by a combination of pro-crypto policies and sheer market optimism. Key triggers during this time included Trump's pledge to retain US government-held Bitcoin, signaling also strong federal support for the asset, and even plans to establish a Bitcoin and crypto advisory council aimed at creating industry-friendly regulations. Also, his proposed replacement of Mr. Anti-Crypto SEC Chairman Gary Gensler has also eased fears of regulatory crackdowns, fostering confidence among investors. Furthermore, Trump's advocacy for US-based Bitcoin mining as a driver of energy dominance and innovation, alongside his promise of federal interest rate cuts, has increased liquidity and bolstered demand for crypto assets. This policy framework, combined with Trump's branding as a pro-crypto leader, has positioned the US as a potential global blockchain hub, further amplifying bullish sentiment in the market. But while prices recently exploded, the market actually started to cool down. And this brings us to the question if the crypto market is currently overheated and what we can expect to see in the near future. First, it's important to understand the reasons why the prices are currently falling, because there are indeed some reasons. The total crypto market experienced a sharp drop, falling to 2.9 cent trillion after failing to break above the critical 3 trillion resistance level. This marks a key inflection point. The bullish momentum has faltered, reflecting growing hesitations among investors. The market appears to be testing the lower end of its range, which coincides with previous consolidation areas from previous in mid-November. On the other side, there are also overbought market conditions. A very significant example is Bitcoin itself, with a relative strength index recently hitting its all-time high at 88.79, signaling clearly overbought conditions, as RSI values above 70 typically indicate excessive buying. This level remained above 70 for almost 3 days, highlighting that the rally may have been overheated. When RSI reaches such extreme levels, it often precedes a market cooldown or correction, as traders then start to take profits. Meanwhile, on the other side, Ethereum fell below its 200-day moving average of 2,950, suggesting the potential for further bearish trends. The moving average is generally a technical tool that shows the average price of an asset over a specific period, let's say 200 days, to identify trends. And if prices stay below the moving average, it could signal sustained downward momentum for Ether. Failing to hold this level might lead to increased selling pressure. But of course, if it recovers above it, stabilization or reversal could even occur. The next reason might actually be the most obvious reason. This one, of course, is profit taking. I mean, Bitcoin hit numerous all-time highs, the last one on Thursday, but saw profit taking shortly after. And this for me is not very surprising, as at some points profit have to be realized, and it's not only private investors. The main contribution were actually the Bitcoin miners, by selling approximately 25,000 Bitcoin, worth 2.25 billion, and as the cryptocurrency hit its all-time high. And this marked the largest miner sell-off since May this year, which created significant selling pressure that added to the market's bearish sentiment momentum. Finally, when also looking at the broader market, the crypto market aligns with a broader risk-off sentiment that has emerged across global financial markets. Rising US Treasury yields and a stronger dollar have led to reduced appetite for riskier assets. This, of course, also includes cryptocurrencies. To add on to the macroeconomic side, the US Federal Reserve Chair Jerome Powell made a statement about a strong US economy and that there is no rush to cut any interest rates, which of course dampened the market sentiment even further. Additionally, inflation data was slightly above the expectations, which of course also weighed on risk assets like crypto. However, on the other side, Donald Trump's election win has significantly boosted the market sentiment, as he plans to position the US as a global crypto leader. His administration is reportedly considering crypto-friendly figures like Esther Pierce for regulatory roles at the SEC, CTFC, and FDIC. And this aligns with his campaign to streamline crypto regulations, to establish Bitcoin as a national reserve, maybe even, and oppose central bank digital currencies. Also, venture capital projections from firms like A16Z foresee clearer regulations, enabling most tokens to gain clearer recognition, which can pave the way for innovation and improvements for all of crypto, which would be massive. What is also very interesting is despite the drop of Bitcoin and Ether, ETFs have continued to see significant capital inflows during that time, with 110.96 million for Bitcoin and 143.7 for Ether in recent weeks during this drop. This institutional adoption highlights the growing mainstream confidence in cryptocurrencies as a long-term asset and confidence that we are not entering a bear market anytime soon. Also, when looking at Bitcoin's current market cycle, it suggests further room for growth, with analysts projecting maybe even a potential peak around mid-2025. Also, when looking just at the history, Bitcoin has historically, after halvings, triggered extended bull runs that lasted nearly a year, often resulting in several 100% gains. Well, of course, there are no guarantees that this will repeat. The current bull run, following the April 2020 halving, appears to be remarkably short, with less than 7 months of upward momentum by November 16. This could suggest that there is still additional time for the cycle to play out, potentially aligning with past trends. And of course, what we can also not forget is that Bitcoin has reached a significant milestone. Bitcoin's market cap has surpassed silver's, which has positioned it as a major global financial asset, attracting institutional and retail investors alike. This growth underscores its increasing legitimacy as a legit store of value and a strategic asset. Finally, to add on, there are also forecasts of a US recession in 2025, which aligns with Bitcoin's expected peak, as investors may view it as a hedge against economic uncertainty. So finally, what can we take away from this? In my opinion, the crypto market shows clear signs of overheating, highlighted by the miners taking profits, of course, and investors sell-off. Also, the overbought indicators like an RSI that hit its all-time high, and Ethereum dipped below its 200-day moving day average, contributed to a worse market sentiment. Also, rising treasury yields and Fed's comments weighs on crypto and its prices. However, I have to say I remain positive with strong fundamentals, as the significant institutional ETF inflows, in my opinion, show long-term confidence. Also, there's optimism expected from Donald Trump and his agenda, potentially even cutting crypto taxes. And also, if Trump delivers on all of his promises, it could spark a renewed rally, potentially until mid-January, when Trump is officially president and he starts to support the industry. So in short, I believe the current cooldown is a healthy pause, with likely another bullish wave once new policies and support measures materialize. However, investors should be careful to not become too greedy. They should closely monitor regulatory developments and macroeconomic shifts to navigate the next phase of the economic market. But again, this is of course not financial advice. Now it's your turn. What do you think? Is the market overheated, or is this already the end of the crypto bull market? Make also sure to check out my other videos to get an understanding of what we can expect from the crypto market under the upcoming Trump administration. That's it for today. Take care. But of course, don't forget, don't become too greedy.